All right, folks, welcome back to another episode of me recording the day-to-day process that I'm taking to achieve long-term consistency in the financial markets. Today is another trading day. Today is another great day to get better, and today caps my best month of trading ever, which is a good milestone. I'm pretty proud of it, but I know that my job is far, far from over. I know that there's still a lot more work that has to be put in each and every day, which I will do. And there's a lot of flaws that I still need to work out of my process, a lot of flaws that I still need to work out of myself. So, with that being said, let's get into today's review. Let's go ahead and pull up trades out. Let's look at the dashboard. And these are my statistics for this month. I'm up 4.64 times what I risked this month. That is the multiple that I'm focusing on. I'm not focusing on the dollar amount. The dollar amount is cool, but what I need to be focused on right now is how much I'm making relative to my risk, because I'm trying to build a repeatable process. I'm not worried about the money. I don't care how much I'm making. I care about these numbers here. These numbers are going to tell me where I'm going wrong and where I'm going right. And if you look at my trade win percent, you can obviously see that is somewhere where I'm going wrong, because only 4 out of 13 trades that I took this month were winning trades. But out of those 4 trades, I'm still profitable. How is that even possible? It's because my risk this month was very, very well managed. If we look at my average win to loss, I have a 3.24 on that. My average losing trade being 0.92R, so literally less than what I intended to risk. That's the average amount that I'm losing per trade. And then my average winning trade, I'm making around 3 times what I'm risking. So that's pretty good. Pretty good statistics. The only thing that's lacking really is my trade win percentage. And that is because of a problem that I've identified that I've had for a long time. It's just a lack of setups, a lack of like an actual playbook, things that I'm looking for, certain moves that happen at certain times that I'm looking for when I come to the market. But today I did begin to define that from piecing together a process, right? I want a high dollar amount. I want to make a high dollar amount, but that dollar amount has to have a repeatable process behind it. If it doesn't have a repeatable process behind it, then it's luck. The market gave you a lick. What you're doing is it's not going to produce long-term longevity in the market. I'm going to be in this thing for the long run, so I have to do things the right way. So I'm beginning to outline my playbooks. I'm noting an opening range playbook that typically happens between 9:30 and 10 o'clock. It's just a couple of characteristics in price that tend to repeat over and over again. And then a late morning session reversal that tends to happen sometimes. Like this usually happens. It's not an everyday model, but it usually happens. And then my entry criteria that I'm actually using to get into a trade. This is just characteristics in the market. When X, Y, and Z are present, then I'm looking to be a buyer and I'm looking for the market to deliver this kind of price move. The entry criteria is actually what's going to get me into that trade idea. And then my approach to the market, I'm dialing that in as well. Like when I come to the market, everything that I do from start to finish, I do this, 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 and this, and this, and that gives me the trade idea that I'm looking for that session. I also need to work on day selection, my high probability days versus my low probability trading days. I know that high probability days are days with high impact drivers. Low probability days are going to be days with no drivers or days before major news events. And then rules. This entire time I was actually lacking rules for myself, which is not necessarily a problem. As you can see, I operate without any finite rules, but my risk is still very well managed. If we look at the net daily profit and loss, look at my losses. Very, very, very consistent. So that's actually something that I'm really proud about. The only thing that I'm lacking, not the only thing, there's probably 10 million other things that I'm not aware of right now until I actually go back and review my trades this month. But number one factor, it's definitely going to be my trade win percent. So with all that out of the way, a little overview of everything. Let's go into today's trade and why I took it. So let's go to the notebook. Let's go to the daily notebook and Friday, June 27, 2025. Okay. What was my bias and why? Today my bias is bullish because of the daily chart and how price delivered the sell side of the curve, leaving smooth highs intact on the way down, revealing market maker intentions. So let's just jump right into 15-minute because this is just straight up on what I was looking for. I say we're clearly on the sell side of the curve, so it has to deliver a discount objective first before climbing back inside the range. The market should deliver these lows but still close back inside the 1 hour buy side and melt sell side inefficiency, this rectangle right here, and not close the premium opening range gap. So the market's right here just before the 9:30 open, so I know we're going to have a gap up opening. Market close at 4:14 regular trading hours here yesterday. Today it's opening higher. We have a gap higher opening, a premium gap opening. And then on the 1 hour, I want to see it find support in this balanced area price, tapping this down candle to push back inside the range, even if we are bearish today. I'd like a lower wick that taps the down candle, but the bodies indicate a respect of this gap at 10 o'clock, and the move potentially comes after that. So basically, I want to see this candle trade down into this gap. These down candles respect this balanced price range, and then trade higher. Now I see this down candle overlap this up candle, and that kind of makes me a bit skeptical of holding a bullish bias. But I know that the daily time frame looks like this, right? And every single time that we've seen a drop lower, it has not lasted. It just stops dead in its tracks, and the market turns back inside the range. So despite this drop, I'm coming into today looking to be a buyer. Now here's what I saw on the lower time frame that really made me want to be a buyer. You have an idea of what I was thinking on the hourly time frame? If we just go to that real quick. There's a lot of back and forth in this area price, right? So it's going to take a significant move for the market to break below that. It's a balanced price range, so I want to see the market drop into that, respect that, find support inside of these down candles and this gap right here. Because when the market is bullish, down candles should act as support. And basically, I want to see this candle open, drop into this gap, but close above it. That would be a sign of strength, telling me that the market is strong and it should be bought. Then on the 15-minute, I know that we're on the sell side of the curve in this market maker buy model, but I'm thinking, what is the discount objective that the market's reaching for on the sell side of the curve? Like, it's reaching for something below the market price. What's it reaching for? Well, I'm thinking that it's going to reach for these lows simply because they're very smooth, and that's usually where liquidity is. That's how I look at the market. That's my logic behind why the market should drop to this low and then reverse. If we look at the 15-minute, you see where this candle closes, and this candle opens, trades down, takes that low, closes near its high. All the bodies stop in the upper quadrant of the 1 hour gap. So that tells me the market is strong at this moment in price and should be bought. Now there has to be a reason for it to go the other way, and there is a reason for it to go the other way. If we look at the lower time frame, pre-market, I'm noting how, as the market's dropping lower, you notice how not one candle takes the previous candle's high, meaning we don't have a run on buy side liquidity on this entire drop lower. So that clearly tells me we're on the sell side of the curve. The market is engineering buy side liquidity on this drop lower. You can see this high, right? It comes just shy of that high. So what does that make on the lower time frame? Relatively equal highs. This high doesn't take that one. This high doesn't take that one. This high doesn't take that one. It's just going straight lower. It's just leaving. So we have that 830 driver that drops the market lower. So we have a data high. That's always going to act as a draw on liquidity. So on top of that, we go to the 1 minute time frame. But before I do that, note that the 5 minute tells the same story, right? All the bodies on the 5 minute also indicate that the market is respecting this gap. So that's perfect. If we go to the 1 minute time frame, we can really see those smooth highs left in the market as it's dropping lower. So I'm putting a little eye icon above this because I'm watching this. When I'm seeing these relative equal highs develop, boom, boom, very smooth. This high doesn't take that one, it leaves them equal. So there's going to be liquidity resting above those highs. I mark that as an area of interest. This candle doesn't come near these highs. These candles, nice and smooth, nice smooth edges in price, right? This high and this high, boom, double top, right? Equal highs, and then the market drops lower. First thing that it does at 9:30 is it opens and it drops lower, closed back inside the range, took this low, but look where the bodies still close in the upper quadrant of that 1 hour gap. So now the 15 minute, the 5 minute, and the 1 minute are all telling me, by the basis of the close of these candles, that the market is strong here and it should be bought. And there's also a reason for it to go the other way, because we have equal highs here, we have equals highs here, and we have data high here, and the daily time frame is bullish. So each moves lower. All the moves lower that we're seeing, they're not lasting. Okay, so when this large up candle comes in, after two pokes below previous lows that failed, this candle dropped lower below that low but closed higher. This candle dropped below that candle's low but closed back inside the range, still inside the 1 hour gap, still closed inside the 1 hour gap, never left it. So the bodies are telling you what it's going to do. The bodies are telling me right there in that moment it's strong and should be bought. And then this large candle comes in, boom, confirms a reversal. That's what I need to see. I want to see a large candle come in, overlaps these down candles at that moment in time. I'm thinking these down candles should be bought to take the market to at least these highs, because there's nothing in this price leg down here that I think will act as resistance and keep the market from going higher. I think it should have a pretty easy time drawing for at least this high. Like, that's my bare minimum target, minimum threshold. I know it's likely to draw for data high or even make a new high a day, but I'm just looking for this low-hanging fruit. So show the execution. Let's see. Okay, there we go. Okay, so I bought the market as I was trading down into this down candle right here, like that. Falling candle trades lower, but look at the body stop on the 9:30 opening price, just like that. Right there, and then large candle up. So I also managed the trade very, very well because I knew that the market was high resistance, meaning it's just having a hard time going higher. Because look at all the back and forth, like it's very volatile at the open. There's just a lot of back and forth, right? So I know that I'm not going to demand precision. I'm not going to demand that it just touches these down candles and boom, immediately starts running from there. I'm going to expect to encourage some drawdown on the trade, and I do. I enter here, I get about 8 handles of drawdown, and then boom, it starts working. But I know that this is a very, very good trade just because of all the time frames agree. And this large candle comes in, boom. That's what I want to see. It's perfect. That's basically the logic behind the trade. I wonder if there's anything missing that I didn't mention. Notice how we have the premium gap opening, okay? So because the daily time frame is bullish, I'm thinking how should the market treat this premium gap opening if the daily time frame is bullish? Well, it should drop into that gap and it should leave it open, because if it drops into the gap but leaves it open, that's also a sign of strength. So everything here at the open telling me that the market is strong and it should be bought. And I'm targeting a low-hanging fruit objective framed on the 1 minute time frame. I'm noticing all the smooth highs left on the way down, so I'm thinking, what is the market reaching for? I think it's reaching for these lows. Once it gets to those lows, can it reverse? That's my question. Does it have a reason to reverse? Yes, because of all the smooth highs left on the way down. We'll take that trade in and out in about 20 minutes, 40 handles, not a bad trade at all. A good way to end the month, definitely, especially yesterday. Yesterday's session was a bit frustrating because I should have been done real quick and early with this trade right here, but I trailed my stop and I knocked myself out prematurely. The original stop was above this high, sold short on the low of that candle, got knocked out prematurely before it delivered to the level that I was looking for. And this market yesterday at the open was also a high resistance, meaning the market can have deep retracements before it delivers what I'm looking for. So the last thing that I should do is trail my stop down. So I took that lesson that I learned from yesterday and I applied it to today's session. I'm noting that these conditions are high resistance at the open. The last thing that I want to do is trail my stop up or reduce the risk on the position, because that's the nail in the coffin in high resistance conditions. So I don't adjust the risk on this position to just below the midpoint of this level until the market does this, where it drops down, closes above the 5 minute inversion fair value gap, and then begins to consolidate. This consolidation tells me the market's pretty comfortable where it's at. It's not going to reverse. So I'm comfortable in this trade delivering these highs at the bare minimum when the market starts to do this, right? Showing me no willingness to break lower. And there's nothing in here for the market to actually reject. So it has to at least deliver those highs. So my original stop was just below the hourly gap because I'm allowing for a drop back into it because the market is high resistance. I'm allowing for that. I'm allowing for a deep retracement. Once it gives me this confirmation right here and consolidates, I know it's not going to reverse. So I trail my stop just below consequent encroachment of this gap. And the risk on the trade ended up being only about 11 handles to make 40. So it's pretty good. Pretty good trade, pretty solid. Let's go back to TradeZilla and get a little walk through my process. So number one, my pre-market game plan. What was my bias and why? I record the screenshots of everything. And then live trading. I'll go through my thoughts intraday as I was reading this live in real time. At 9:35, I said, I like how price is leaving really clean highs above, but having a really hard time moving lower, leaving wicks. Moving lower, leaving lower wicks, and still closing inside the 1 hour gap at 9:40. I'm telling myself the trade looks good, and I don't think there's any reason for it not to deliver my draw. I do think how it gets there is going to be very slow and painful. The last thing I want to do is trail the stop up. That's the nail in the coffin. The 1 minute is going to make me freak out. The 5 minute is going to filter out most of the high resistance noise that would scare me out of the trade like yesterday. So I'm taking the lesson that I literally learned yesterday, applying it to today, boom, and I don't do anything. I don't do anything bad on the trade. I think that was from start to finish, the planning to the execution to the management of that trade was just phenomenal. It was just a really, really good way to end the month. So the good, I approached price today looking for one thing to occur in submission to my draw on liquidity. I thought about the market criteria present and how price should behave post 9:30. Because of that, I felt the urge to soup it, but knew to wait for real confirmation. Once a large candle came in, I executed with no hesitation. My entry is tailored to high resistance liquidity run conditions buying the down candle. My stop is reasonable, not expecting the market to trade below consequent encroachment of the 1 hour gap. So here's my little trade review process. I like to go through a thought process analysis, like why did I take this trade? The logic behind the trade, which I ran y'all through. Before the trade, what was I thinking? I liked how price left the clean highs above 9:30, but struggled going lower. It's the same thing that repeats at 9:30 almost every day. So that's what I'm going to build a playbook around, because I just see this same thing happening almost every single day. During the trade, I'm noting the high resistance delivery, but I'm not allowing it to scare me out of position as it did yesterday. So because of the trade, the mistake that I made yesterday, I was able to profit on this position, which is why everything happens for a reason. Everything happens for a reason. I had to take that losing trade yesterday and then go on to end the session in a frustrating way, taking another loss in order to learn that lesson, apply it to today, and take a solid trade, start to finish, perfect plan, perfect execution, perfect management. A great fucking trade. Just good, just all out good. And then all the lessons that I learned. So it really showed me a lot about my approach to price, like how I approach price, the process that I'm taking start to finish. Just kind of touched on in the middle of the video. And I think that'll about do it for this one. You can see my daily stats here, the daily net cumulative P&L. On the month, I finished $2,100 in profit. So it's something. It doesn't mean that I've made it. I know that there's no such thing as ever making it in trading, because you're always going to learn new lessons. You're always going to hit new roadblocks, and you're always going to be met with new failures and new problems and new this and new that. It never ends. So I'm looking at these stats and I'm thinking, okay, that's cool, but this isn't cool, and this isn't cool. You know what I'm saying? And I'm looking at this and saying this isn't cool. There's still a lot of room to grow. Like, this is 100% my best month of trading ever, but I don't feel like I'm trading near my best at all. Like, I feel like I could be doing so much better. If I feel like I could be doing so much better, and what I'm doing right now is profitability, then I know that I'm going to be fine. As long as I keep doing this shit every single day, I'm going to be good. And that's a good feeling, because I believe in myself. I have trust in myself. I trust in my ability. I trust myself to consistently show up to the market and grind every single day. And I know that it's a given that eventually I will get to where I want to be, which is long-term consistency from the financial markets. Just the ability to feed myself. That's really all I want. Just support myself and support my girlfriend. And that's it. And that's that. So thanks for watching this one. Until next time.